statement and macroeconomic framework statement. Thank you.
Honorable members, I have to inform honorable members that panel of vice chairpersons has been reconstituted with the following members: Srimati Ramila Ben Becharbhai Bara, Srimati Seema Dwivedi, Dr. Ami Yaznik, Srimati Mosam Noor, Sri Kanak Medla Ravindra Kumar, Sri Prabhakar Reddy Vemi Reddy, Professor Manoj Kumar Jha, Lieutenant General Dr. D.P. Vats Sevanivrit. The House stands adjourned to meet at 11 a.m. on Friday, the 2nd February 2024.
All right, so those pictures coming in from the Rajya Sabha after the budget was commended to the Lok Sabha. It's being presented in the Rajya Sabha also. Remember, both the houses have to pass the budget. There would, of course, be a short discussion also, and then it gets passed. I believe in the Lok Sabha it did get passed, right? And the Rajya Sabha, in fact, got adjourned till tomorrow. We are looking at the takeaways from the budget. We are having this conversation. And Sharmila, our business editor, is with us. We have spoken about the fiscal consolidation. We have spoken about the continuity. We have spoken about the political messaging in the budget, a bit of which I saw also, like it is as a journalist to see, as a political observer. The finance minister, I'm told, wearing a Kantha silk sari from Bengal. And the color was Ramam, as it is called in Tamil Nadu, right, Subramanian? Yeah. Right, Mr. Subramaniam? Exactly. So the blue color of Ram, and it's called Ramam in Tamil Nadu. So the focus entirely on Bengal and Tamil Nadu, I believe, and political messaging, so to say. So I think going ahead, let's continue the conversation on the specific areas, some of the specific areas which the finance minister focused. So for example, 100,000 crore, 1 lakh crore rupees corpus for sunrise sector research. Now, isn't this fantastic? I'm told we are joined in by Mr. Adhil Shetty. I believe he's joining us from CII, if I can be told. Okay, Mr. Adhil Shetty, the CEO of Bank Bazaar, is joining us. Mr. Shetty, your first reaction to the interim budget that the finance minister has just presented.
Yeah, we like the coverage on the digital economy. So the finance minister recognized digital public infra as the new factor of production. This is a big, economic statement. You think of labor, you think of capital, but to say that digital public infra like Aadhaar, video KYC, UPI, that this is the new factor of production is a big deal. You covered the 1 lakh crore, 50-year low interest rate to zero interest rate loans for sunrise sectors. We'll see the scheme to see how it's being operationalized, but 1 lakh crore is a lot of money, right? A lot of money to be investing in growing innovation sectors. She spoke about regulatory support for MSMEs. A lot of new digital laws are coming out in India, digital privacy, digital India, SRO for fintech. So I think if we can create an innovation ecosystem in India, we could be the digital economy of the world. I think it's an exciting time.
Adhil, Sharmila joining in and adding to Abhishek's question here. We know that the government's intent is to make more and more people shift from the old regime of taxation to the new regime, but we don't see any incentivization just yet. Do you expect some movement in the next July budget where you think a nudge from the government would onboard more and more people to the new regime of taxation?
Yeah, great question, right? Because we find in most cases when we do the math at Bank Bazaar that people are actually better off in the new regime. To give you a data point, unless you have over 4.2 lakhs in deduction And 4.2 lakhs in deduction is difficult. It means home loan interest of 2 lakhs, NPS of 50,000. You're actually better in the new regime. But because of the status quo, right, people have not shifted. I think in July, if one sweetener can be given, like last time, they reduced the highest tax rate, they reduced the number of slabs from 6 to 5. I think one sweetener, like you said in July, can do the trick to have a mass transition to the new regime.
Adil, are you sure? Are you sure that the new tax regime is attractive? My CA tells me otherwise. That you're better off with the old one.
So unless you have deduction of over 4.25 lakh, which I find a minority of people have, you're actually better off in the new tax regime when you're a salaried over 15 lakh individual. But I think the status quo is stopping people from moving because I don't want to go through the trouble of running the calculation. But today you can do it online in 2 minutes.
No,
please try it.
No, but the important point is not about the new tax regime, about 4.2 lakhs. What is important is that if you remove the old tax regime, your savings will go away. You understand that yes, it will translate into consumption, but consumption of what? Data, mobile and stuff. So remember that it is a double loss. The government also does not get the money, the insurance sector does not get the money, the long-term bonds don't get the money. So the savings will move away, and the gross domestic savings, which moving from a socialist economy to a capitalist economy, we have seen fast erosion or reasonably fast erosion of GDS, and we do not want that to happen. We don't want India to be a country 25-30 years later like America, fully debt driven, because today if you look at an employee in my organization who is earning 40 to 45,000, he average holds 6 credit cards. Now this is not great news for the youngster. We need to have the GDS up. So the old tax regime should stay because it allows people to save. If you move on saying that, okay, I'll give you till 10 lakhs, don't save money, just spend it. Consumption may move up. Added to that, inflation will also fast shoot up. So I believe both the tax regimes are a good thing to have. We need not incentivize to move to the new tax regime.
Your thoughts on that, Adhil? It's very interesting what he just said. So that do we move towards a fast consumption economy, which is a given when a country is looking towards becoming a developed nation, but then how do we also keep our domestic savings protected?
Well, if I could just respond, the interesting thing is that what is incentivized in the old tax regime is saving through insurance. If you save through fixed deposits, you don't get the incentives. So if you're in a new tax regime, you're not going to do as much saving through investment. You're just going to place much more fixed deposits. So I think in some ways, if there's a benefit from this, it is a shift from insurance to banking. The banks will benefit a bit more from the adoption and acceptance of the new tax regime.
Okay, Adil, since you represent Bank Bazaar, we know what has happened yesterday with the Payments Bank of Paytm and the RBI. Your thoughts on the stability of the markets?
So first
and
on
the
the
sector?
earlier question, and then I'll comment on this. So I think what the financial situation in India today is, a lot of good financial products are out there which you should buy irrespective of having a deduction or not, or an incentive or not from a tax perspective. So what I mean by that is, look at a product like term insurance. Everyone needs to have 5 times their annual income as term insurance if they die. Look at what's happening with SIPs. So I think the belief today in India is we have a mature financial market, which fortunately the regulator has made very consumer friendly. So there is an incentive to buy a product, whether you're in the new or the old regime, because you should be saving via mutual funds. You should be having term life insurance. You should be having general insurance. Now, what the regulator is saying, right, to your second question, is that people need to follow the rules for long-term success. Everything the regulator and the RBI has done, they said it's not about short-term growth or breaking the system, but we have to do the things which will build for long-term success. Yeah. That means good governance, following the compliance rules, and partnerships, right, between the banks and the fintechs. So I think let's look at what the regulator wants over the long term. They want fintechs to grow. They want digital economy to grow. Everyone in India, and the finance minister mentioned digital economy, innovation so many times. Artificial intelligence, right, is going to transform India in the next 10 years.
Okay,
but we have to do it, right,
Adhil,
while ensuring compliance, ensuring governance. And I think that's the long-term
Adhil.
trend the regulator is setting, saying, yes, please innovate, but please make sure that we follow the highest
Adhil,
standards
just
of
hold on
governance.
for a bit. There is some technical issue that we are just sorting out, meanwhile, you were disagreeing with him on something.
I was
Subramanian.
disagreeing with two facts. See, where I humbly disagree with Adhil is that, India is a matured market, it's a wrong data.